Can you hear me? I don't think he can hear us. Yeah.
And
Testing.
give everybody a few minutes to get up here and get situated. We're gonna give the live stage a little time to cook. But what we're gonna be doing today is we're gonna be having some fun with learning how to
Oh.
trade with AI.
Hey,
Um,
let's go. What are we using?
we're gonna use we're going to use ChatGPT for this one. Because ChatGPT is good at general information usually.
Yeah, he is.
That's the one thing that I actually enjoy ChatGPT for. Um, okay, what the fuck is this? Okay, the trading channel, support and resistance, understands where. Okay, cool. We've got some videos we can watch with this too. Let's go.
Let's go.
So ChatGPT
Let's
is giving
go.
me
That's the
sessions
W.
like,
I
hold on, I want 5 to 10
I'm
minute
bullish for that.
videos, or as
Hey
close.
Maya. Hey Maya. Wait, Maya, I think you need to open up a ticket
Yes,
or something.
Maya. I asked Maya before if she opened a ticket, but yeah, she said not
Maya,
yet. Just got home from
Maya, did you
school.
open a ticket? Please tell us. Yeah,
It
what
takes you
tell us
five
your information.
seconds because if you
Yeah,
miss out
Maya,
on the
come on.
deadline, you lose out on rewards.
Yeah.
I don't want people to
Do
lose
it.
out on rewards.
Do it
So make
now.
sure you open your
Oh,
ticket.
I'm becoming a villain. Do it
Do
now,
it
Maya.
now. Do it now. No.
It's me watching too much
Ah.
Stranger Things.
Yes.
I
She's
felt it right now.
adapting to the Stranger Things
Yeah.
weirdness. All right, let's go. Let me get this up here. I will start sharing this. Share your screen,
Okay.
entire
Okay.
screen,
So I
share
while
screen.
you're sharing your screen, I will also teach option. What
You
you call
what?
this? I will teach Crib how to not watch the stream.
Yeah, Crib needs to learn. This one he might want to watch, and I don't know how long we're actually
But
gonna run with
yeah,
it. But I don't like this one. This one might be important to watch along with, rather than just. Here we go. The trading channel
yeah.
support and resistance for beginners. Quick guide.
Wait.
Okay, so we're gonna go and search this. So this is what we're doing today. We're looking for hold on. I gotta okay. Gotta get that over here. Blah, blah, blah. Bang bang bang. All right. Too many things on my screen. Let me see. Move this over
Oi,
here.
oi. Oh my god.
Well,
Yeah, thing.
just hang out,
Yo.
Bowie. We're hanging out. We're having fun. Um,
Yeah, Bowie. Just chill with us. Watch with us.
all right, here we go. The
And
trading
learn with
channel.
us.
This is one that it's suggesting.
I
So
know
I
that trading psychology is not a very
ah,
sexy subject, but
that's loud. All right,
Yeah.
so this is ooh, what is this? An hour and 17 minutes. The only technical analysis video you'll ever need. Like these are the type of things that are going to really help you with stuff like this. The only market structure they like this guy's really good at his marketing stuff too. Because he's got really good titles, he's got really good thumbnails. Let's see, support and resistance for beginners, copy. So we're gonna go over a couple things as we go. Um, the trading geek on the trading channel. Wow. Okay. This one's 11 minutes. This one isn't too bad. 1.7 million views. Um, trying to find shorter videos. Like I don't wanna overload us on 40-minute video on the first day.
In
I want
this
to get a
video, I want to
couple
show you how to
of
correctly draw
smaller.
your support and resistance.
All right, so I'm gonna share this here in case you guys don't want to watch it on stream. You guys can watch it here with me on your own. You don't have to, because it might actually be better for you guys data wise if you don't watch it with me at the same time, like through the stream. But like, just trying to be conscious of that for you. All right. So, how to support and trade, how to trade support and resistance. Now, this is a little bit of an older video, if I'm not mistaken, 3 years ago, but this applies, right, to just about everything that you do in trading because it's simple fundamentals. It's not like you're doing advanced trading strategies based on like the last 90 days. You know what I'm saying? Like there's opportunity for you to learn no matter what. Really, Crib? Is that why you do so good with the damn trading?
I
Jeez.
think so. I think so. That's why he's doing good trading. Nice.
But yeah, so let's check this out real
Oh.
quick. This is probably one of the most important things you can focus on in the beginning. Support and resistance is the key to knowing where you're going, right? If you can accurately measure what the support is, you know that when you're moving down, you can expect a reversal there potentially, right? Now, there's other like advanced topics if it bounces off of resistance 2 or 3 times, like it's possible that it can break a support because there's just so much downward pressure and it's kind of exhausting the bulls, you know? But oh, I see. You should be able to hold down on the stream, right? And
No,
you should be able
it's not.
to turn that off.
No, Taris, it's not. Only like for only on the normal VC, I think. I don't see it. I
Oh
tried like
no,
in mobile as well, yeah.
that's no good. All right, so we're gonna get this kicked off though. We're gonna dive into this a little bit here. So this is the Trading Geek channel. He apparently has a ton of stuff. He's got a lot of viewers. He's got a very short video on how to trade support and resistance. This is an important idea or topic because a lot of times, and it's also a dangerous topic too because realistically you can be trading on support and resistance plays. Like, yes, today is degens, so creators are Mondays, degens are Tuesdays, and then we're gonna have community stuff either Wednesday or Thursday. It'll either be a bot or a quiz or something else along those lines so that we can kind of give everybody a chance to enjoy something because I know a lot of people enjoy the trader stuff, but I also know a lot of people enjoy the writer stuff and the community stuff, right? So, hey, MA, what's up, buddy? All right, so let's kick this video off. Let's let him do the talking. Um, so secret roles, examples, how to trade, most replayed. So the how to trade is the most replayed. Looks like people trying to get a really good understanding of that. 1.7 million people viewed this though. So let's see how this goes. Ready, set, let's go.
Resistance levels. In this video, I want to show you how to correctly draw your support and resistance levels so that your charts do not look like this. Ew, what the hell is even that? Support and resistance or key levels are one of the most important things that you must master when trading. But 99% of traders are still getting it wrong. Why is it so important? Because if you can find key levels correctly, it can give you a high win rate trade opportunity. Look at this example right here. There is a resistance level right here because price went up to this level and then reversed downwards. So the next time when price hits this level again, there is a very high chance that it's going to reverse downwards again, so you could have entered right here. A very common mistake that traders make is that they draw too many lines on their chart just like this. What the hell are you doing, bro? Stop doing this. How can you trade with like 10,000 lines on your chart? This just makes you more confused, while the whole point of drawing key levels is so that it makes it easier for us to analyze, make it less confused. The reason why a lot of you are still making stupid mistakes like this is because you do not follow the secret rules of support and resistance. The first rule is multiple rejections. You can see in this example, price went down to this level 3 times before reversing back up, showing us multiple rejections. So we can draw a support level right here. Next, every time price went up to this level, it always rejects this level and reverses. So we can draw another resistance level right here. Now you might be wondering, what if the charts looks like this when there is no multiple rejections yet? Glad you asked. Which brings us to the next rule. Price needs to move away from the swing low or swing high. In this example, you can see that price has not formed multiple rejections yet, but you can see that it has formed a swing high and move away from it. And when it just move away and reverse and head back down, it doesn't just move a tiny bit, it moves significantly. Yep. So what you can do is that you can draw a resistance level right here. Here's another example. You can see that price has been going down, it has just been a downtrend, and then it went back down to this area right here, and then reverse and shoot back up significantly. So what you can do in this case is that you can draw a support level at this swing low. The next rule is that a level can be both
Okay, so let's take a moment for that, guys, because swing low and swing high sounds like it's super important, right? If you think about it, these are marks that you can try to get in early before it sets a steady sideways pattern for support and rejections, right? So you've got an opportunity there where you see the swing low or swing high, where you can get in on potentially early trades in a consolidation period where it's moving sideways before people establish that that trend is that trend, right? So you can set a resistance level at the top there, right? You have to be careful with the. And I hope he's going to go into it, but like confirmations, making sure that the trade is reversing. These are probably things around like forex, which is probably a lot more stable and a little less. I mean, it's volatile, but it's not as volatile as the crypto market. You know, so like these are things that we have to be careful with, because you have to take into account the excess volatility of the crypto market. Because if, as you know, like when it comes to let's say BTC, we've seen $8,000 drops in an hour. We've seen $8,000 pumps in an hour, right? So like these things are important, and it's just that like if you're just watching this part, it can be misleading. Oh, I can just hit up here. I see that, it came all the way up here, but then it dumped down 1,000 points. But now it's BTC, so now it's gonna pump up another 5,000 points, and I went in on a short. So guess what? Now I'm fucked. You have to be careful with that. Confirmations help. Being a little more cautious, especially in the crypto market, is kind of better. So just be cautious about it. But yeah, let's keep going.
Support and resistance. Support can become resistance, and resistance can become support. You can draw like a support level right here because price reversed 3 times at this area, and whenever price come back down to this area, it always shoot back up. So there's a very strong support level right here. And look at what price did when price break through this support level. It came back up to
And another note, this is Japanese yen to USD. So it is the Forex market. The Forex market can be really volatile, right? Like this is moving from 137 down to 135, right? That's not like that's a big move for Forex, right? For that one big red candle. But for crypto, that's like the equivalent of like half of a BTC shoot up or dump, or less. And then to top it off, it can also go other ways very, very heavily. So it's tough. You got to be careful with that.
Retest this support level, and now your support level is acting as your resistance level. You can see right now price is unable to break past this resistance level, which used to be the support level. Next, the levels must be near the current price. Yep, when you are marking a key level, You don't want to be marking one that is way too far away from where price currently is right now, like these two levels right here. These two levels, they are irrelevant. There is no point in drawing them because we only want to draw the levels that matters right now. Because remember, too many lines will look too confusing for us. So in this case, what I will do is that I will just draw a support
And you
level.
got to notice he's looking at the history on the 1 day chart, right? Even if he's going to trade, a little differently, like if he's going to trade on the 15 or the 1 hour, right? He's still looking at the long-term history to get an idea of where the market's been moving, right? So you're not just going and saying, okay, well, let me look at the 15-minute chart for the last hour worth of candles and see what it's been doing. You're looking at the general trend of the market for the past couple days or months. Depending on which one you're playing in. Like specifically when it comes to crypto, you're probably gonna look over the last few days to week or two, right? Whereas with forex, you might look over the course of months and see what it's been doing. With forex, they follow a lot of like the financial announcements that the U.S. makes as well, just like a lot of the other trading areas do. All right. Yeah, so let's keep this going. Hey, girly, what's up?
Level right here. You can see whenever price comes back down here, it always reverse and hit back up. And then I will also draw another resistance level right here. So these two key levels are the only key levels that matter. Now that you have understood these 4 secret rules, let's apply whatever we just learned to the charts. So in this example, I can draw a resistance level right here because whenever price comes back up here, it always reverses.
Bounces,
So
yep.
this shows us that there is multiple rejections. So this is a very strong resistance level. And the reason I draw it right there is because it is also near our current price. It's not too far away like all the way up here, right? It is near our current price, so we still have to take into account.
You guys got to note too. He's looking at the 1 hour mark right now, so he's probably trying to get in on a short scalp trade, high leverage, make as much money as he can as quick as he can. It bounced here. He knows resistance is up here, and I haven't watched this yet, guys. So, but he would probably take a long trade here get, like estimating that it will come back up towards the resistance level because it was a heavy push down and then it pumped and then it bounced, right? So he's going to think that the support is going to be here, right? And the resistance was formed up here unless it breaks through that's where it bounced here, which is entirely possible considering it's got heavy downward movement again, right?
On this resistance level. And then you can also see right here, this is when price move away significantly from our swing high. And then I can also draw another support level right here because whenever price comes back down here, it always reverses.
So he's
And this
calling
just shows us that this is a very strong support
there.
level because there is multiple rejections at this level. And then at this point of time, this is when price has finally broken through our support level. And look at what price did. It come back up here to retest this support level, which now act as your resistance level.
Okay.
And guys, I want you to know that this entire area here is your support area. Alright, remember, support and resistance, they are not just one line like this. Alright, this entire area here is a support area. That's why you can see when price come back up to retest this, it does not come up.
That's another thing. A lot of you guys, girly, you're always welcome to come and tease me. It's fine. I'm a big boy. I can deal with it. So that's another thing. The support. A lot of us work off of lines, but it is an area. It's based on like the bottom of the candles and the wicks down, right? And the bottom of the candle, the top of the candle, and the wicks up. But it is a range for the support, so it could like you could try to get in at like the top line and go over this top line here for like a short, and then it could pump all the way up here before it comes back down, which can hurt your trade, right? Like or scare the shit out of you and make you dump out of a trade that you necessarily shouldn't dump out of. But yeah.
to retest like a level like this. It came back up to retest an area. So you can see price went back up and reject this entire resistance area which was previously supports. Here's another example. You can see that there is multiple rejections right here because whenever price come back down here, it always end up reversing and heading back up. Come back down, reverse and head back up. So and then there is also a resistance area right here, right? So it's clear as day that this is a resistance area and this is a support area because it fully just satisfied the rules that we just talked about. But do you want to mark a level that is right here? No, because that is not where price currently is. So it's irrelevant. It's way too far away from us right now. It's ancient history. It's dinosaurs, alright? So we do not need to care about these levels that are like 10 years ago or even 1 year ago, I don't know, a few months ago. You don't need to care about those levels, alright? I really want you to focus on where price is right now. Focus on drawing the most recent key levels like this. The only time when I will draw this support level right here is when price break through this support level and it's like going down, then that is when I will draw this support level.
There you go. That's another thing, right? Historical support beyond what you're immediately looking at is only for a hard breakthrough. Like there's a lot of line here in between this support level here and where it topped out and where it was at before, right? So like there's no historical support here right now. So if it breaks through and it continues down, the likelihood is that it could potentially bounce again back down here. This is the same thing with crypto, guys. Everything that applies to Forex, everything that applies to stock trading applies to crypto. It's just more volatile, faster paced. That's all it is.
Level. But if it's not, if it's still within this consolidation, within this area, you should not be drawing key levels that is like way far away from the current price. Now that you have learned how to identify support and resistance levels, how do you actually trade them? Glad you ask. So in this example, I have marked up a resistance level right around this area because whenever price gets up there, it always gets rejected and head back down. So this is clearly a very strong resistance area. So the first thing you want to look out for at this key level is to see what price is doing. Is price going to break past this level or is it going to reverse and head back down at this resistance level? So in this case, price actually gave us an evening star candlestick pattern, which is
that's something else that you guys have to know. Like the candlestick patterns, even though they seem confusing as hell sometimes, and they can be, right? You know, you've got what shooting star, you've got evening star, you've got doji, you've got fucking all these other weird candlestick patterns that you can look at. The cup and handle. There's a lot of different things that you can check out. Some of them apply, like some of them only really apply to longer trading periods, though. So you can't really like look at the 1 minute mark and be like, oh, I see. What was it? The one strong soldier or whatever the fuck it was. Like I barely remember the pattern names, but you can't see that on the 1 minute mark and say, oh, it's gonna pump, you know. But like if you look at it on a larger scale, you can see like the longer term patterns, longer term trading history. You can see those things and kind of plan around what's coming.
Basically a reversal pattern that tell us that there is a lot of sellers in the market right now. It's no longer an uptrend and price is going to reverse and go back down. And by the way, there are literally like hundreds of reversal candlestick patterns out there, so you can just choose whatever you like. But for me, I just love the evening star candlestick pattern because it's so easy to identify, and I see this candlestick pattern at this key resistance level. That is the first sign that tell me that price is reversing. But we do not want to enter here yet. We don't want to enter immediately when we see an evening star. We want to wait for multiple confluences, right? We need other confirmation that tell us that price is really going to reverse and head back down. The next thing that I saw at this resistance level is the moving average crossover. That is the next.
So EMA, yeah, he's doing 8. So that takes the last 8 candlestick patterns and creates an exponential moving average, and it shows you what's happening, like as far as like the trading volume is going.
next confirmation. So you can see previously right around this area, price has been above the moving average. You can see all the candlesticks are just like above the moving average. But right now, at this point of time, the moving average has crossed over. So this is what we call the moving average crossover. You can see right now the moving average is above the candlesticks now. So that's the second.
I'm teaching you how to lose money right now, girlie, because half of this shit, even though you know it, you still fuck up and you still lose money. It's just how it works.
Second confirmation that tell us that price is reversing. So what I will do is that I will enter for a sell position right here when I see the moving average crossover, the evening star reversal candlestick pattern, and price is at a key resistance level. I got the 3 confirmation that I need, so I will enter for a sell right here. And I'll place my stop loss above this resistance level here. And guys, remember, you do not want to place your stop loss super duper tight like this, because there is always a chance that price is going to go back up to this area and retest it before heading back down. So you want to give your stop loss a little bit of breathing room. And if you guys know me, you will know that I place my take profit at the next key level. So the next key level is all the way down here. The reason I marked up this as a key level is because if you look towards the left, it used to be a resistance level. You can see right here, it used to be a resistance level, and now it's probably going to act as your support. So that will be by take profit. And as you can see, the trade literally went down and smashed our take profit, and right now you will have made a whole lot of money. Don't worry if you still do not get it. Here's another example. You can see that right now price is at this major support area right here, but we do not want to enter immediately when price is at this support level. We want to wait for our confirmation. We need 3 confirmation before we enter for the trade, and right now we only have 1 confirmation, which is price is at this support level. That's the only confirmation that we have, so we cannot just enter based on that. So right now it's still
So right now it's based off of a historical either prior resistance or prior support that he's looking at, right? And he's also looking at the EMA here, right? So now if it comes back up and it crosses over the EMA and it bounces off of this new form support level, right? He's going to take that as a confirmation and he's going to get into a trade. He's got his resistance point, his historical support or historical, yeah, it looks like it was a historical support that he had here because it was trying to bounce here, right? So, but it then broke through. So he's setting this as the prior support mark, right? Or prior support mark is the new resistance mark, which is going to give him the opportunity to set a buy here, right? Set it considerably below the range that he has there, and then he's going to set the sell up here or up here, right? And realistically, that's not a bad strategy. The likelihood is that if you take your time planning this out, you can make more money. Don't rush to get into trades.
be patient and wait. So you see, like right now, the next candlestick price shown us is a bullish engulfing candlestick, a big fat green candlestick at this support level. What does that mean? That means that there is a lot of buyers at this key support level pushing the price up. This shows us that price is not going to break past this strong support level, and that's a second confirmation. The third confirmation is this moving average crossover. You can see at this point of time, the yellow line, the moving average, is going to go below the candlesticks now. So now that we have our 3 confirmation, I will enter for a buy right here. And I'll place my stop loss once again below this support level. And I can't really see because my camera is in the way. Yup, so I'll place my stop loss below this key support level and place my take profit all the way up at the next key level, which is this resistance level right here. And once again, I marked up this resistance level because if you look
easy
towards
until
the
you're
left,
doing it
you will see that
yourself,
it used to be a support level right here. Whenever it come back down here, it always reverses, come back down, reverses. So it used to be a support level, and right now I'm expecting it to become a resistance level. Now let's look at how this
I called it. I called it, and I didn't watch this yet.
trade will play out. I'm just gonna fast forward this thing so that I don't waste your time. And you can see like price just going up and going up, going to our take profit, and we just wait, be patient, and bam, we just smash our take profit right here, boys, and we have closed the trade. Yup, it's really just as simple as that. Like this video if this video was helpful, and smash on that subscribe button.
I'm gonna
and
like
if you want to take this strategy to the next level, you need to combine this strategy with candlesticks, and you can check out how to do that in this video right here. Welcome to.
Let's
If you
see.
don't know where to start trading or you are still struggling to make
Let's go through this
consistent
one.
profits, this video is for you. Because I'm going to reveal how to become a six-figure trader from scratch. Now, I started with
From
less than
zero, he's saying.
$100 in my bank account 5 years ago. And right now, I'm a 22-year-old multi-millionaire.
So he started with less than $100, right? And he took his wealth up. See, this is like a lot of people play on this heavily because it gets a lot of views, right? Everybody wants to make a ridiculous amount of money and to be able to support themselves and not have to worry about going to work every day and all those other wonderful things, right? And that's great. The only problem with it though is that starting off with less than $100 is difficult, right? Because you have, if you're going into the stock market, you can't go into the stock market because you have to have a minimum of $25,000 in your funded account, or you have day trader restrictions, which limits how much money you can make on a day-to-day basis, which getting from zero to hero, it becomes more difficult there because you don't have the initial capital funds to fund an account that has those freedoms, right? And then if you look at like forex, forex is super volatile, but forex is complicated compared to the stock market. It really is. You have to figure out MetaTrader. You have to figure out brokers. You have to set up an account with the broker. You have to put your money in. There's fees involved. You have to make sure that you're not taking profit at points that actually don't put you in profit. Because even though you take profit at a certain point, you may not be in profit, right? Because you're trading and you may scalp a little bit of money, but you're losing money on those fees still. So you're actually at break even or a net negative, and that's not what you want to do. So realistically, make sure that if you are going into these things, that you're going into these things with this in mind. Every trade that you want to like, you're never going to be profitable on every trade, right? Like you're never going to be 100% profit on 100% of your trades. You can do really well, right? But you're never going to be 100 for 100. There are traders who have really high win rate percentages, and those guys are typically they're at like a 60 or 70% win rate. That's super high, right? That's super high already. So it's something to think about, right? I'm gonna like this one just because I want to support other creators. Not that this guy needs fucking all that much support. 993K, you know.
And in this presentation, I'm gonna review everything I know about trading so you too can master trading and live the life of your dreams. This presentation is divided into 3 parts. There's so many different assets which you can trade, which is why you will learn which one is the most profitable in part 1. And then in part 2, you will learn the exact proven trading strategy that made me over 6 figures. And in part 3, you will learn how to think like a professional trader, which is honestly the most difficult part about trading the financial markets. This video is for you if you want to start trading.
The mindset, the mindset is probably the most important thing for a trader, right? When you look at a price going up, right? Like right now, I got like fucking 4 notifications, right? I don't know if you guys can see that very well, but I got a bunch of notifications on prices pumping, right? ICP prices up 10%. Um, you've got Crosslink prices up X%. You've got all these things that are up, all these percentages, right? Bitcoin's up to 94K. Let's actually take a look at that real quick. Let's take a quick look at that. Dex screener. Oh shit. Dex. Right? Let's look up Bitcoin real quick. BTC USD. BTC USD. Right? Where the fuck is the chart? Oh, there it goes. So looking at this right now, right? I'm on the 15 minute. Let's look at the hour. Hold on. Did I forget? Oh yeah, it's up here. Let's look at the hour, right? Let's look at the day, right? So we're looking at the day right now. BTC is up to 94K. BTC is up like $3,000 from where it was at bottom on this last candle, right? Now, does that mean that it's pumping and we should buy in? Wait, can you guys not hear me?
We can.
Okay. Yeah, the fire. All right. So I was like, wait, what's going on here? So looking at this, right? Looking at the day, if we go by what he said before, right? Look at these movements here. These are day charts, day candles. You can't go by the day candle, right? Because in one day it went from what the fuck is this? 216K down to 107K. It went from like these are wicks. These are heavy buys, right? So like even the day chart is fucking wonky though. But let's look at this, right? So we had a previous support looks like here, right? I would say about here. So let's do this. Let's do nope, that's not what I wanted. Shit. Can I do oh, nope, that's not what I wanted either. All right. Let's see. Ruler? Nope, that's not what I wanted either. All right. So this one does obviously doesn't work the same way as the one that he had, right? But let's see right here. Bounced here, bounced there, bounced again, right? So we're going to go through that, right? This was a previous support. This was a previous support here, right? And then this was a previous support as well. This was a previous resistance mark here though. So I can't see that far back either, which sucks. Let's see, 1 year. Let's see, 5 years. Day chart. I guess with the day chart we can only look back so far. This is kind of annoying, but okay. So let's say that this was the support previously, right? Which would match up with this become, or maybe that was a previous resistance and now it's becoming a support, right? This is going really far back, right? But if we zoom in, right, we've got this, which was the support. This is like a historical support from back here, right? This is a current support that it was, right? And there's the resistance was up here, right? So let's run through this real quick. Okay, stay right here, 120, right? So 120 was the prior support. So now we've come and we've broken down. Let's get the EMA up there real quick. Indicators, EMA, um, EMA, right? Let's do 8. Coordinates, visibility, price bar. Oh, I'm actually not liking this one. Let's go to trading view. Trading view better. Free. No, I already have an account. BTC, USD. We're at the 15-minute mark right now. Let's just focus on the 15-minute mark, right? Let's get rid of fib. Let's get rid of fib. Get rid of, let's add the EMA. EMA. Moving average. There we go. EMA 9. Let's do EMA 8. Like he was doing, right? So you see it broke out hard over the fucking, like it crossed down here. Like this isn't the same thing. Like we could probably look at 5 minutes, right? And it's not the same thing as the forex charts, right? Um, let's go to 15. Okay, let's just do the hour. Fuck it, 260, right? So we know that we pushed back up here, but we also know that it's hitting like a historical resistance mark. So there's potential for it to pull back here, right? Now, of course, like he was saying, you want to wait for confirmations, right? We've got what's looking good right there, right? Where is it going to come back to, right? What's going to act as the prior support? Because we broke through resistance, what looks like here, right? So let's say about here, right? And we'll do two of them, right? And the top of this candle here. I'd say this is more of like a test here of the resistance than actually breaking through. There's only like $1,000 difference, right? And then it bounced here on the support, and it pushed, right? That's a good one there. Let's see. But now it's come back up to this resistance point here, right? Which is historically accurate, 94, 94.5, somewhere around there, right? So if you look, it's bouncing at the same range here, but it's also looks like it's trying to push through. So we haven't gotten a confirmation yet. So we can't make that trade, right? If you trade here and it pushes through, which it looks like it may do, then you're screwed, right? If it breaks through here, we can look back historically, right? And this line's a little crooked, but if it breaks through here, we can look back and see that the next point is, let's see where the next support is. Looks like about here. It you want multiple confirmations for support or multiple rejections or bounces. So this one doesn't look bad, but it's also, let's switch to the hour. See what the hour looks like. Yeah, this honestly, if it breaks through here, I can see it pumping hard because this is a big drop. 15 minutes again. Let's see. This area is not bad. This area is bad. Well, that's 89. We're already above that. This is 94. It's testing here. So if it breaks through here, possible we could see 99, I'd say. So realistically, if it breaks through here, heavy, right? Let me try to get zoomed in here, which is breaking through pretty good, right? There's still a decent amount of there's a decent amount of buy pressure. It's still above. It's still green. It tried to push back down, and it's still positive. Um, let's just flip charts real quick for the hour here. Why do these charts look so different? Probably because I'm on the 50 mark. Ah, I fucked it up. There we go. Yeah, this chart looks different from the other chart. I don't know why. I know it's an hour chart on the other one. Okay. Oh, 15 minutes. Yeah, and you see it's still pushing, but you got to remember, like crypto's super volatile, guys. Like this can go from here down to 92 and or 93 91 in a heartbeat. Like it's not necessarily going to like this isn't necessarily a breakthrough. Like this is something that you would get excited about on forex or on like stocks. But with crypto, this can flip back so quick. And that happened to me a couple times the other day, JK, if you remember.
Yeah, I remember that we were watching it, getting so excited, and then all of a sudden, like boom,
Yeah.
it just it
Yeah,
plummets.
it just completely flipped on us because it's just
Yeah.
that volatile. There's the chance that you're going to get wrecked if you're not careful. See, sell pressure is picking up. The wick's coming up. We have you would have to see if the we'll come back to this though. Like we'll leave this up and see where it goes. The fact that it crossed the EMA is good, right?
Hmm.
The
Yeah.
fact that it's pushing up and kind of past that initial like that resistance mark from here is good, right? It's past this resistance mark. It looks like it's breaking past historical resistance from earlier, right? It looks like it's good to run. And if it does run, looking at the history of this, I would think that it would run up to around 99, 90, maybe, yeah, around 99, 98.5, 99. I would say that that would be the next mark that it would go to, right? The problem is that these are longer trades, right? This isn't like Forex where you're hoping to get like 10 or 20 candles in. Like I could see this hitting 99 or 98 in what? This is 15-minute mark. I could see that happening in what, like the next 50 candles or some shit, 100 candles, like within the next 10, 15 hours. So that's a longer trade, right? Now, if it flips here, right, and it comes, if it rejects off of here hard, it'll come back down at least to the 91, 91.5, if not come back down to the 90, 9,500, I'd say. So you'd have a good downward range to play with, right? But it looks like it's pumping up, which we'll see where it goes. But let's continue with the video while we wait for that to
but you don't know how to get started.
unfold.
Or you kind of know what to do, but you are not getting any consistent results. Or you want to take your trading to the next level and scale to 6 or even 7 figures.
Okay, I like everything he's saying here because I kind of know what to do, but I'm not getting consistent results, right? You want I want to get 6 or 7 figures. Hell yeah, I'd love to go from $100 zero to hero kind of setup. You know what I'm saying? Like that's kind of what I want to do. I want to make some money. I want to create generational wealth. This guy's really good at his like his streaming and his platform and everything because of how he's doing this. It's
Here's
building
my
up that
guarantee.
excitement and that
By the
hype
end
for
of
you to
this
get
video,
interested
you will learn the
in
exact
what
steps that
he's
you
doing.
need to take to become a consistently profitable trader and make your first 10k a month from scratch. Everything that I'm about to teach you will transform your life, and I don't want you to miss a single crucial step. So all I'm asking for is for you to put your phone away and stop reading the comments on this video. How bad do you want it? If you want to succeed as bad as you want to breathe, then you must absorb every single thing in this video. And the only way you can do that is if you put this video on full screen and you give me your complete attention. And you might even want to grab a pen or paper and start taking down some notes. Who the hell am I and why should you listen to me? Here's my story. My name is Brett Go, and 5 years ago I was working as a
Oh
waiter in a
God, this is a
restaurant serving
long
food and drinks earning
introduction
minimum
video.
wage, making $7 to $8 per hour trying to make ends meet. I genuinely hated this job so much, but I had no choice because I needed allowance for school and I did not want to rely on my parents who were already struggling to put food on the table. 1 year later, I landed an internship in a real estate company, so I pretty much worked a 9 to 5 job for 6 months, earning only $650 per month. At that point of time, I was actually learning forex trading on the side. I would study the courses and books on the commute home, and once I reach home, I would study until 12 a.m. and wake up and go to my 9 to 5 job again. And I did that for 6 months straight. And then I enlisted in the military and I became an infantry soldier for 2 years. No matter how tough or tiring the training was, whenever I had any sort of free time, I would pull up the charts in the barracks and look for trading opportunities. This is when I really became consistently profitable after years of losing money and struggling at trading. And fast forward to right now, I'm a full-time trader, 22-year-old multi-millionaire.
You know, I want to note something here, right? He mentioned that he joined the military, and as much as I hate war and everything, right, guys?
Mm-hmm.
Like I hate war, I hate all that shit. Like it's governmentally beneficial, not beneficial for the people usually, right? I as much as I hate all of that, right? It it does help with something called discipline, which is something a lot of
True.
us lack these days, right? Like
True.
mental
That's true.
and mental and physical discipline are two things that as a society we're slacking on, we're lacking on, right? And these are two things that can really help you when it comes to trading, right? Taking care of yourself, something I need to do better at myself. It's hard for me because I'm always connected. I'm always online. I'm always doing something. And like you put aside your physical health, your mental health, and taking care of yourself properly. Make sure that you're taking time out a day to stop and cook yourself a good meal. Stop and take a shower. There as hard as that is to say, there are times when some people don't. Like you're just so connected into what you're doing. You don't have the drive to get up and do something. It makes it's time consuming. It takes time away from things that you want to do for things that don't seem as important, right? And that's where it becomes difficult. And I would say just make sure that you're taking the time to take care of yourself and like put the time and effort into what you need to do aside from what you want to do. Get into a disciplined routine, especially when it comes to trading, because different times of the trade differently based on what markets you're looking at, right? Um, Make sure that you're taking Taurus. Yeah, well, I'm a fat fuck. All right, doing anything is hard. Damn it. Um, but yeah. So when you go and you set yourself up like the whole Jordan Peterson make your bed today thing, right? The Jordan Peterson make your bed today is like one of the crucial things. Just start off by making your bed every morning when you get up. Start off with taking 15 minutes to make yourself a good hearty meal in the morning. Just a couple of eggs, some toast, maybe some sausage links or something. Make yourself something to help get you started and to put you into kind of like a work mode instead of I just got out of bed mode, right? Give yourself the opportunity. Go take a shower, go do what you got to do, maybe work out. Working out is good, okay? As much as I hate it, I feel like working out for those guys who love working out, I hate you. Okay? I'm going to say that right now. I fucking hate you. Okay? Because for some reason you have this ability and this desire, right, to constantly abuse yourself day in and day out endlessly, right? Whereas I can't even get myself to abuse myself once a day or twice a week. You guys thrive on that shit. I like working out is abuse to me. Like you're physically torturing yourself, and then usually you're paying for it because you're buying gym shit or going to a gym or whatever the case is. It's like right. So yeah, working out is hard, but it's needed. There's other ways to work out that's more fun, but we won't get into that. Um, anyway, um,
Excuse me, Paul.
excuse me, pause. Yes, I was waiting for the pause there. Um, But yeah, make sure that you're taking the time to do those things, guys, because the actual discipline aspect of military is probably the most important thing that people get from it. Um, because you get into a constant rhythm of doing tasks over and over again. And when it comes to like social media and the way that life works nowadays, where we're disconnected from a physical workplace, we don't have to go into physical school. It's harder for us to get into a system that continues to push us to stay on track. So we get very dysfunctional compared to how it was before. When I used to wake up and go to school in the morning every morning, I'd have to get up. I don't want to go to school smelling or go to work smelling. I got to take a shower. I have to eat because I'm not going to be able to eat while I'm at work unless I order food. If I order food, I'm going to spend more money. And then you think about all of these things as you're going when you're doing a day-to-day life deal, and that structure helps pull you into being more disciplined. Otherwise, you lose your job, you have no money, you can't do shit, right? So, no, surviving isn't easy. But the way that the world works with normal 9 to 5 behavior, it tends to allow you to be more functional because there's a structure that's already laid out for you. I have to be at work at this time, right? I have to work for this amount of hours. I have to make sure that I'm fed. I have to make sure I don't smell. I have to make sure, these are necessities at that point. When you're at home and you're doing school from home or work from home, these necessities aren't as necessary because you can wake up when you want to, get to work, do your hours for the day, have no problem, right? But now, like with the way this is going, like it breaks a structure, it breaks a discipline pattern, and that makes it harder for people to stay on track with certain things, right? But but yeah, it looks like this trade's probably gonna be flipping here. It's probably gonna what swing high. What was that term, Crib? Swing high that he said. Is Crib even here anymore? Did Crib bounce on us? I think Crib bounced on us. Yeah, Crib bounced on us. Poor guy ran out of MTN. All right, let's get back to this one because we're starting to.
managing six figures in trading capital, and also we just
We
hit
could
a
probably
million
just
subscribers
skip
on YouTube.
his
Some will
introduction,
consider me
but
as the
there may be
greatest
good
trading
information
mentor
there.
that ever exists because my videos have allowed them to generate consistent profits in the markets. Since I started the trading gig, I've been
Oh,
documenting the raw reality, the good, the bad,
there
the
we go.
ugly, which is why I've only shown live trades, and just last month I withdrew 11.4k from one of my smaller live accounts, as you can see in the broker's statement right there. Now, the main reason why I became a trader was not just because of money, it's because of freedom. Location freedom. With trading, you can make money from anywhere in the world, whether that's sitting on a beach in Thailand or traveling around the world with your spouse. Time freedom. You can wake up at any time you want since you don't have to answer to a boss. This means you can be at your desk at 4 p.m. or even 2 a.m. and trade for just like 1 hour and make more money than your friend who is working a 9 to 5 job. This also means you are able to spend as much time as you want with your kids and loved ones without worrying about meeting deadlines. Financial freedom. In trading, there is no limit to the amount of money you can potentially make. This means if you are able to make the right trading decisions, you essentially have the power to print money like banks do. Now, as much as I enjoy my freedom right now, life hasn't always been this way. Growing up, my family had nothing because my parents did not earn much from their jobs. My mom is actually an uneducated farmer from China, and this was the exact village that she used to stay in, whereas barely any electricity or access to clean water. When we moved to Singapore to build a better life, we had to pinch pennies just to get by. We could not afford to eat out, and we had no choice but to wear second-hand clothes that were used by other people. My mom always told me, if there was no hose, it was good to go. Now she gets anything she wants, whether that is a fancy Van Cleef bracelet or a Louis Vuitton handbag. If she wants it, I will get it for her. And that's the best part. We don't have to look at the price tag anymore. Now we can eat out whenever we want, and most of the family dinners are held in fancy restaurants where the water costs like $5. As for my dad, he
Water
dropped
costs
out at the age of
$5.
16 and he worked all sorts of odd jobs like being a cleaner and a masseuse just so that he can put food on the table. He worked endlessly, day and night, and we still barely got by because he wasn't getting paid much from his jobs. And he did that until the age of 63, where most people had already retired, but he couldn't because he got 2 kids to feed. And that is why I started trading 5 years ago.
So for me, my why when I started trading was that I wanted to retire my dad. I wanted to retire my father, who is 60-year-old and he's still working to provide for the family.
Whenever I felt like giving up during my trading journey, I thought about him. I can't lose because I promised him that when I become successful, he will never work a day in his life. Fast forward to today, I'm proud to say that I finally retired my father 3 years after I made that video. To this day, this is still my biggest flex, to be able to retire my father at the age of 22. And now he complains about having too much free time. You see, nobody handed me anything. I built everything brick by brick. Trading not only gave me freedom, it also gave me the ability to provide my family with a better quality of life. It allowed me to break the generational curse of poverty in my family. You owe it to them. It is your duty and your obligation to become successful for them. Now that you understand why trading is the best way to achieve freedom, the next question becomes which.
I'm going to say this. It can be the best way to achieve freedom, guys. It's not the only way to achieve freedom, right? Separating yourself from regional requirements, working online, doing jobs that you don't have to worry about what your local economy looks like helps. Like getting into online courses on marketing, there's a bunch of free courses on stuff like that. Like I know we're talking about trading here, but I also want to make mentions on things like this, right? Because when we think about like breaking away, we think about everybody who does trading, right? And that can be just as hard, and you can lose a sizable chunk of money. But yeah, exactly. There is a very difficult path doing that, especially as you're learning, because you will make mistakes, and if you're not disciplined, you will take risks that you shouldn't take, and there will be moments when you end up possibly dumping yourself back out of what you would like to what you like to make money on, right? So like these are things that like make sure that you're not making stupid decisions. Play it safe still, right? Make sure that you're not taking excessive risks, right? Hold on. second, guys. I gotta add something to my MetaMask over here. Oh shit! I clicked the wrong thing. It looks like I don't know. I don't know how it's gonna go. Bitcoin is such a bitch, but you can do things like online marketing courses. There wasn't an announcement. It was added to the events, and then there was a notification when this went live. So when I start the events, it sends a notification out to all you guys. It doesn't. Ronin, sync, wallet, MetaMask, connect, approve, add Ronin. There we go. Bang. All right, real quick. Let's see. Should be able to. Hold on. There we go, Ronin. Edit. Abstract, add Ronin, update. Bang. All right. So, well, I'm glad we woke you up, Leo. Sorry about you missing out on the notification today, but yeah, we're checking out trading. Today's the trade Degen's Den. I just figured you weren't interested in the Degen's Den because realistically, some people like the trading events, some people don't. Um, but yeah. So anyway, let's continue with this. Which asset should you trade? Let's go on to that. Yeah, I like losing money on trades too. I fucked up the other day, right? That trade that I had that I was in the positive on and I neglected to take profit on it, and then I fell asleep and it hit my liquidation point. So I didn't just lose the $36. I lost more than that, which hurts a lot. Um, but yeah. So ready? Let's continue this. Just remember, guys, you can do anything. Marketing is another digital online thing. You have community management, another digital online thing. You have social media management, another digital online thing. Programming, coding, another digital online thing. You have a lot of opportunities, guys, besides just, yeah.
Which asset should you trade?
She hangs out with a bunch of Nigerian people, bro. Come on.
After all, there's so many different asset classes to choose from, such as stocks, futures, options, crypto, bonds, and even forex. I would advise you to choose wisely because the wrong choice can actually do more harm than good. In order to pick the most profitable asset to trade, you need to ask yourself the right questions, and it's just 3 simple questions. Firstly, what is your financial goal? If you want to make quick profits and get in and out of the market fast, you can consider assets that are more volatile like crypto, stocks, forex, or even options. On the other hand, if you are looking to build wealth over time, you should invest in less volatile assets like bonds and low volatility stocks. And the thing about stocks and crypto is that you can choose to trade them or invest in them for capital appreciation. Once again, it's really up to you. The next question is, what's your risk tolerance? The general rule is that the more risk you take on, the more money you can potentially make or lose. High risk assets are cryptocurrencies, options, and futures. Moderate risk assets are stocks and forex. Low risk assets include bonds and dividend paying stocks. If you're a beginner trader, I would advise you to stick to moderate risk assets because they offer just the right amount of trading opportunities. The third
What happened? What happened, JK? Oh. Go get some rest, JK. Well, I may bookmark this for next week too. Just so that we can continue to go over some stuff.
Question you need to ask yourself is how much money can you afford to lose? Now, this is not the same thing as how much money you have in your bank account. You should only trade with money you can afford to lose, and it's usually your disposable income after
And
paying your
JK,
bills and
on that going down, I gotta say this.
day-to-day expenses. If you're planning to start trading with less than $1,000, stocks, forex, and crypto will be the most suitable for you. You can actually start trading these assets with as little as $100. On the other hand, if you have more capital, you can consider trading futures and options. Now you might be thinking, okay, cool Brad, I still don't know which asset to pick. Should I trade crypto, stocks, or forex, or what? Now, I'm going to give you an answer that you might find controversial, but it's really not. It's simply the reality.
Controversial.
You should not trade cryptocurrency because it's way too volatile and unpredictable. You should not trade futures and options, especially if you are a beginner, because they are more complicated and require a larger investment. You should not trade bonds because they move way too slow. It makes a good investment, but it's a bad asset to trade. And that leaves us with stocks and forex. Now, as a beginner, you need to find something that fits into your schedule and obligations that is not too risky but not too safe. And it allows you to start with as little as $100. And that's exactly what forex trading allows you to do. Right now, you might be wondering, why did I choose forex over stocks? There's actually a few reasons. Firstly, the forex market is open 24 hours a day, compared to the stock market, which is only open for a fixed amount of hours per day. This is a huge upside because I can.
Forex is the beginner's guide to crypto. It's a 24-hour market, Monday to Friday. It's not weekends, so that's one of the drawbacks. So if you work a lot during the week, you're not going to be able to really capitalize too much on the forex market during the Monday through Friday period. There's certain days that these markets trade, certain times that are crucial, certain news and announcements that really affect these things. So you have to remember this is going to make life a little more difficult for you if you're trying to start off in forex. Crypto is, like he said, super volatile. Like I said, dollar cost averaging into dollar cost averaging into crypto is probably the best way to make money because then you can take better advantage of really high points and you can take better advantage of really low points. You can buy in more when price is lower. You can save up until it hits a higher price point. Trading futures, trading perpetuals, trading like high leverage is dangerous with cryptocurrency because you have a lot of opportunity to lose money. Okay? These are important things for you to consider when you're getting into trading. Now, a lot of you guys are already trading cryptocurrency, right? A lot of you guys are already trading actively in the crypto market. And yes, you guys have a better understanding of some of this stuff, but realistically, Forex might be the better option for you. Realistically, Forex might make you the money that you need to dollar cost average into crypto. And then when you get into a good situation financially or a better situation financially, right? You can then work on building up a fund for crypto trading. Then you can sit there and take the risks without feeling that pressure, that psychological factor that a lot of people suffer from when they're going through crypto. All right? Because that's where a lot of the problem lies. Is that you get scared of making a trade or you're scared to get out of a trade because you know you're going to lose money, right? And if you lose money, you can't afford to make your next trade, or you're not going to be as profitable. And this is where that psychological factor comes into play heavily when it comes to what we're doing for our portfolios. Um, so forex might be the way to go. Stocks might be the way to go. Stocks are a little harder to do because they only trade between certain times and they're only available certain days of the week. They're talking about making stocks 24 hours Monday through Friday, which would be kind of crazy. I think that the stock market would go nuts if we did that. But at the same time, we have opportunities to trade forex. We have opportunities to still make money. Um, See, it's coming back down. It's forming a resistance here. So now, what I would do? Here we go. We're gonna look at this. So now, since it bounced here, right? We want a confirmation, right? We want it to cross the EMA 8 going down, and then we can set a trade for a sell, right? Coming down to probably I'd put it to 95 or 91, right? But it's also possible that this is just going to bounce back up. Maybe it's going to form a resistance here at the old at a support here at the old resistance. Maybe that's what it's going to do because it's still within a range, right? So that's another thing to consider here. So yeah, let's go back over here. Let's continue with this.
At any time that I want. Back when I was working a 9 to 5 job, I usually use the time after work to trade forex and make some side income. My philosophy back then was to use the 9 to 5 to pay the bills and 6 to 12 to build my trading empire. So this is really the main reason why I love the forex market so much. With forex trading, you can start with as little as $100 because most forex brokers out there offer high leverage. This allows you to trade with a larger position using a small amount of capital. Now, note that leverage is a double-edged sword. It increases both reward and risk. That's why we don't recommend you over-leverage your account and try to flip like your small $50 account into $1,000, even though it is possible. The forex market is the most liquid market in the world, meaning there are a large number of buyers and sellers looking to make a trade at any given time. The daily trading volume is $5 trillion in the forex market, making the stock...
Look at the difference. $5 trillion compared to the stock market, which is 212 billion. And this is a year ago. So these are almost current numbers, right? But if you look at crypto, what is the crypto trading volume daily? Crypto trading volume daily is between 75 to, with the entire market volume. Okay, often exceeds tens of billions in 24-hour trades. Tether recently saw over 12 billion. Bitcoin around 72 billion. Now, did he say this was daily? Daily? Hold on. Let's see.
Risk. That's why we don't recommend you over-leverage your account and try to flip like your small $50 account into $1,000, even though it is possible. The forex market is the most liquid market in the world, meaning there are a large number of buyers and sellers looking to make a trade at any given time. The daily trading volume is $5 trillion in the forex market, making the stock market looks embarrassingly small. This means that over $5 trillion of currency is converted by individuals, companies, and banks every single day. This
so it's 5.1 trillion in volume daily. I thought that was yearly. Okay, so that's daily trading volume, which is insane, right? So we have around 100 plus billion daily in crypto. So we're under the stock market even in volume, right? So if you think about it, there's more liquidity in both. Yep. Here we go. We're about to flip. We're about to come back down. Let's go. All right. So if you think about it, we have more trading volume in crypto than something. Well, we have more trading volume in stocks and forex than crypto, right? Stocks are only like double though. So crypto's catching up quick, but currency exchange is still immense, you know. So there's a large potential for. I'm pushing forex a little bit right now, and I'm thinking about trying to get back into it honestly. Um, so maybe we can even do like a small trading group for forex, and we can all play around with that too. I know we're very crypto focused, but if we can all make some money and blow up on forex, then we can fuel our crypto degeneracy, right? So there's always that. Yeah, I think this is flipping, dude. I think this is flipping. It's coming back down. It's bouncing off of the old support, and it's coming back down. All right, I'm calling it. So we've got another probably like 30 minutes. We'll see what happens in the next two candles. So
liquidity
let's
allows
let's continue with
transactions
this.
to be completed quickly and easily, which allows you to buy and sell anytime. Now, another benefit of having high liquidity is the low transaction costs and fees. Nowadays, many brokers don't charge any commissions for forex trading. However, there are other fees like bid and ask spread and rollover fees. But honestly, you won't really
You have to look if you're gonna get into forex, right? You got to look for a broker that has low spread fees, right? Sometimes paying an actual fee per trade can be better than paying spread fees because sometimes the spread is very heavy, and if you're losing money on the spread because you can't afford to stay in the trade, then you're not trading right. Um, Realistically, I think that if you find like MetaTrader is one of the most popular trading platforms. IG is one of the most popular brokers, right? IG broker trading fees, right? Costs and charges, right? From point one. Trade spreads from point 0.6 points, point 0.6 points on key FX pairs, point 0.8 points on major indices, and point 0.1 points on commodities. So, like, you'd be able to get a better spread on commodity trades. Other charges. There may be other potential charges and factors which could influence only when applicable. Account charge, $0 account fee. So this is one that I've used in the past actually. And I was kind of like fiddling with forex, but I never got into it heavy, just because I didn't take the time to learn. When I got in, we didn't have all of the YouTube content that we have today on it, right? So I was younger. I was focused on my job. I was doing, I was raising my kid. Like I had a lot of things going on back when I first started with forex. So I didn't end up going into it as hard as I possibly could. Realistically, I should have probably stuck with it because I probably would have made a lot more money. Um, and I wouldn't be, well, you know what? No, I'm happy about that actually because I wouldn't have been here if I didn't. And I'm happy to be here with you guys. So, yeah, I'm okay with that. Um, I am completely fine with that. Let's start this back up because I'm scrolling a
notice
lot.
them unless you trade very frequently or you trade with a large size. Now that you understood how lucrative forex trading is, you might be thinking, wow, since I can make money 24 hours a day, I'm going to become a millionaire trader in 1 week and quit my job. Now, don't let these benefits fool you, because forex trading is not as easy as it seems. Let me tell you about the popular 90-90 rule in the trading industry. It states that 90% of retail traders lose 90% of their money in the first 90 days. Whether that's actually true or not,
I like that 90-90 rule. 90% of traders lose 90% of their money in the first 90 days. That I think that applies to crypto too. Realistically, I think the number's higher. I think 100% of new retail traders lose like at least 75 to 90% of their money in the first 90 days because they don't know what they're doing. I can't say 100%. Maybe we'll say maybe we'll say 95%, right? 95, 95, if not 95, 100, right? You have like those 5% of traders that do okay, and then you have the 4% of traders that do okay, and then like the 0.5 or 0.1 or 1% of traders that do exceptional because they took their time to learn what they needed to learn before they dove into it and like really practiced and got the hang of it.
I have absolutely no clue. But here's the thing. A few years ago, it became mandatory that forex brokers disclose publicly the results of their clients
What's
on
up,
their
David
website
McLean?
to warn new traders about the risk of trading. That's why nowadays when you go to any broker's website, they show you that majority of their clients actually lose money. Now, this was supposed to prevent more people from getting into trading. But that obviously didn't work. Just like how those nasty pictures on cigarette packs don't stop smokers from smoking. In fact, trading became even more popular in the recent years because everyone thinks that they can beat the statistic and become part of the top 10%. So, how do you actually overcome the odds and become part of the top 10% who makes money on a consistent basis? So you can live the life of your dreams just like I do. Whether that's staying in a $10 million penthouse in Dubai, enjoying the sea breeze on a yacht.
You guys need to like numb yourself to these messaging. As much as I love that he's like doing really good at keeping your attention and keeping your hype up, right? This sets unrealistic expectations and sets like hopes and dreams that you may never achieve as a trader, right? You may be able to get to a point where like you're making some decent trades and you're making some money, but like realistically, the person making millions of dollars a year off of trading is somebody who is like excessively dedicated. They're making the smartest trades possible. They're making the trades at optimal times. They're not risking their money in stupid ways. They're not taking trades to try to take a trade and make money. They're taking a trade because they know they're going to make money, right? Like all the stuff that we saw with like the support and resistance secrets that he was showing before. He has a system that he works off of, right? And he knows his technicals. Like these are all important things to consider. Okay?
Or just taking the Rolls Royce to
Don't get
dinner
sucked
because you
into
don't
the
feel
hype.
like driving a Porsche today. Or even simple pleasures like bringing your mom to lunch on a Monday and enjoying the beautiful sunset with your loved ones. Now, I'm going to review the secret that allowed me to be part of the top 10% of traders. The secret is do what others don't to get results others won't. So basically, just don't do what the 90% is doing. This might sound
Yep.
simple, but it's not easy. Hear me out. When you go online to search for free information on how to trade, this is what you will get. They will teach you how to trade using retail trading concepts, which are support and resistance levels, trend lines, candlesticks, and chart patterns and indicators. What if I tell you that all these retail trading concepts, which can be found online, are rigged against you and are designed to cause you to lose money so that they can make money? These guys are the institutional traders who are managing billions of dollars in trading capital on Wall Street. They are the ones who are profiting from your losses. It's because of the fact that trading is a zero-sum game, which means when you lose, someone out there is winning.
Yep.
And if you win, someone out there is losing. Since majority of retail traders lose money, they are essentially transferring their hard-earned money to the professional traders who actually knows how to trade. And this happens every single day. Now, looking back, I realized that I only became profitable after I started to act and think like a professional trader. This was the pivotal moment where everything finally clicked for me. Right now, I want you to think about how much money you want to make from trading per month. Whether that's $5,000 per month or 10K a month, and then write it down on a piece of paper. And if you watch to the end of this video and you apply everything you learn, the number right in front of you will become your reality. However, I hate to break it to you, but right now you have 0% chance of achieving your goals. The biggest mistake most people make is to aim for the goal itself. Instead of aiming for the goal, you should aim to become the person who is capable of achieving the goal easily. Now, the problem is there is an invisible barrier between who you are now and who you need to be to achieve the goals that you want. Here's what I mean. This was me back when I was 18 years old. I was broke and I was lazy.
So this is going back into mindset, right? This is an important part of it. And I'm going to continue to say this endlessly. Mindset is probably the most important part of trading. Okay?
Lazy, I was binge eating, I lacked ambition, I was comfortable,
Good morning,
I was
good morning,
weak
good
physically
morning.
and mentally. I was a losing trader because most of the time I'm trading with my emotions and I have absolutely no clue on what the hell am I doing. And then this is me now at 22 years old. I'm disciplined, I'm focused on a mission and a purpose. I'm grateful but not satisfied. I'm hungry for more. I'm a multi-millionaire. I'm scaling to 7 figures in trading capital. I'm teaching millions of traders worldwide and I've over 1,400 plus happy and successful students everywhere in the world. Now, what changed over these past 5 years? If you look at my face, I look very similar. My name is still the same. The main thing that changed was my identity. This person wanted to become a consistently profitable trader, but it was impossible for him. But it's easy to make 6 figures trading for this person, but it's difficult for this person to make 8 figures trading. I have to transcend into a new version of myself if I want to accomplish this new goal. Understand that you cannot achieve your goals and desired reality unless you become the person who can. Success is not something you chase. It's something you attract by the person that you become. Right now you have greatness within you, but it's been papered over by limiting belief, by doubts, by distractions, by a false identity. It's time to rip those papers down. It's time to shed the old you and transcend into the new you. It's time for you to transform from a losing retail trader into what I like to call an outlier. The outlier is a professional trader with an institutional edge. They make a ton of money consistently, manages his money wisely, and gets paid to live life on his own terms. In order to become an outlier who makes consistent profits, you have to master these 3 keys. The first key to unlocking generational wealth is to have a mechanical trading strategy. The keyword here is mechanical. Before we talk about what to do, let's look at what not to do. Or rather, let's look at how the majority of retail traders actually trade. They try to predict the market on where the market is going to go next. They hesitate to take a good trade setup after a string of losses. They regret not taking the setup after it has already played out.
So this is the thing. Trying to predict where the market is going to go next, hesitate to take a good trade setup after losing, and then often regretting not to take the steps after it has already played out. This is a cycle that you get into, right? Because you have the fear of missing out, so you try to force a trade and predict where it's going to go based on technical indicators and all these other things, and like you switch. This is something that we talked about with Caesar too. You switch between the hour mark, the 15-minute mark, the 5-minute mark, and you try to justify a trade that you want to get into because see a crib. You try to justify a trade to get into based on your desire to make money. That doesn't help you. That hurts you. Okay? And then when you do take that trade, right? After you lose, you see a good trade setup, but you won't take it because now you're like, fuck, I just lost this money. Right? And then you pass up on that opportunity, and now you're regretting it. Right? Because you didn't take that opportunity because you were scared to because you got hurt already in the market, right? So like it's a pattern that you have to break yourself out of mentally, right? That fear, that FOMO, that hype, you really have to play this smart, guys.
Enter trades too early or too late because of their emotions. These rookie mistakes cause their losses to outweigh their profits. As a result, they struggle to be consistently profitable. This is the result of trading with discretion.
There's high risk, but there's high rewards, and you're right. But at the same time, if you're not trading, there's more disconnected ways to trade. When you have nothing, losing anything scares you, right? When you have very little, it it fuels your trading in a certain way. You need to detach yourself from those mentalities for trading in order to ensure that you're trading in smart ways, in more profitable ways, right? And that's kind of what this gets into here and why we went over the whole discipline mentality thing earlier. Because if you're a disciplined trader, you don't have to worry about a lot of these aspects.
Rather than using a set of clear defined rules. When you're trading this way, you don't know exactly what
I'm trying to undegen the degens in the degen den right now, apparently, right? Like it's a little counterintuitive, but I'm trying to undegen you guys, right? Because you shouldn't be taking trades that are super risky because you just hope that you can make money on this flip because you think it looks okay, but you're not sure. But it's pumping, so it's gone up 5 or 10%. Let me jump in now. But that 5 or 10% was the pump that people made money on. So now they're pulling out, and price is going to go back down, and you're going to lose money. You just have to be smarter about the trades. If you miss that pump, wait for when it hits the max, right? Like right now, it's looking. I still wouldn't even get in on this for a short, right? I'm not ready yet because like I might if I was degenning, I might do it, right? If I was degenning, I might do it. I might jump in. But like if you look at this, it looks like it's got the right setup, but it hasn't confirmed anywhere yet. And with crypto, it's volatile as fuck. This could shoot up to 97K in the next 30 minutes, right? So you have to be cautious and very calculated about it. Now, if you start to see it dumping down, it hits this mark, and you have a sell order set for 93.5 or 93.4, and it pushes past. But you also have to then set your stop loss in a smart range too, right? And this comes into like how your risk reward ratio, right? And your range. If it comes back down and wicks down here, but then it pumps back up here, and you don't have like your stop loss set like up here somewhere, you're going to lose a lot of money, especially if you're like me, where I do like 50x leverage. I'm also not very profitable, mind you, but like I do like 50x leverage, 10x leverage, 20x leverage. I do high leverage. So like if it wicks up, like if it's right now we're at 93.73, right? If it wicks up here to 94.73, I'm losing probably like 50% of my portfolio on my 50% of my trade on that stop loss, right? So I would realistically probably set it more up here at the top, 94.2, 94, maybe even, right? If it wicks past here, that way I don't lose all that much money, if it does flip, because it's not bouncing off of the resistance towards that support level. All right. So make sure that you guys are being cautious about it. Make sure that you're setting stop losses. Make sure that you're setting take profits. Honestly, in my opinion, the stop loss is probably more important than the take profit because it prevents excessive losses. Whereas take profit allows for hitting a point that you think it's going to hit and taking profit on it before it comes back down. Um, preventing yourself from losing as much money as possible. Um, take profit has an important factor to play in that, but at the same time, preventing yourself from losing more of your capital is probably more important, in my opinion. Taking profit, yes, great, but not losing 100% of what you tossed into a leverage trade, much more important.
you are looking for on the
We're
charts.
gonna finish
Let's say you
step
open up a
one,
chart
and
on
then we're gonna
Euro
continue this
USD,
next
which
week.
is a commonly traded forex pair, and you are trading based on discretion. There's so many factors that you have to take into consideration because you don't have a plan. Should I buy or should I sell? What price point is ideal for entry? Should I use a limit or market order? Okay, let's say you entered for a buy. Now what? how do you manage your open position, where to get out if the trade does not work out, where to take profit, and many other questions. Now, the market is already filled with uncertainty. So if you still don't have a proper plan and structure, you're just gonna get destroyed by the professionals. So what is a mechanical trading strategy? And how are these strategies turning losing traders into profitable traders? A mechanical trading strategy provides a clear set of simple and statistically proven rules to follow. It's essentially like a checklist that you go through every single day to determine whether the trade is worth executing or not. Here's an example of a simple mechanical trading strategy. I will buy when price mitigates a demand zone, and then I'll place my stop loss below the demand zone and take profit at the nearest swing high. When you have such clear rules, you're not lost when you pull up your charts because
Now, you guys will look at this, and this is stupid simple, right? But realistically, it doesn't have to be stupid complicated either, right? Like, it doesn't have to be super complicated. Knowing what you're looking to risk, knowing what you're looking to take profit on, knowing the movements of the chart and the resistance points and the support points, these things can be enough for you to make some profitable trades. Knowing candle patterns are important, and some technical indicators, but you don't have to know all of the crazy things that some people talk about to be profitable on a trade.
you know exactly what you're looking for, which in this case is to just wait for price to mitigate your demand zone. The result is that you're able to trade with confidence without needing to guess where price is gonna go or rely on your gut feeling too much. Your mechanical trading strategy will be the one that's doing all the thinking. It will decide which trades that you should take, regardless of how you feel or current market conditions. And this allows you to be consistent in your trading and as a result, get consistent profits.
I kind of want to
Now,
create a
if you want to
Forex trading
fail
bot
at
now.
trading, just trade with your emotions. When you start losing trades, you will doubt whether or not your trading strategy actually works. When the next trading opportunity shows up on a chart, you hesitate because you just lost a bunch of trades. And then an hour later, you see that the trade had just played out the way you thought it will. But guess what? You were too scared to enter into the trade.
Yep.
So now you sit there in regrets. And then you start getting angry at the market and take a bunch of low quality trades to make back the money that you have lost. And you end up losing even more money.
Don't revenge
This
trade.
is the fate of the masses. And this repeats over and over again until you eventually quit trading. Now, if you want to succeed, use a mechanical trading strategy. Test it out in both simulated and live market conditions and then gather data to back up your strategy to prove that it works. When you do this, you gain confidence in your own trading ability and plan. And then when you combine this with a professional trading mindset, you will start seeing consistent results. This is when you can start scaling your trading to 6 or even 7 figures, eventually becoming a top 1% trader, aka an outlier. Now, in my experience, the best trading strategy is not 100% mechanical. It's 80% mechanical and 20% discretionary. It's important to still rely on your human judgment and gut feeling sometimes, especially when you have gained years of experience in the markets and you have developed great pattern recognition skills. Now, if you're a beginner, I will still advise you to use a 100% mechanical trading strategy.
Develop that repetitive instinct for the mechanical trading strategy. Get used to that strategy and sticking to it, right? And then add the discretionary in is what he's saying here. And I'm sure that's where he's going to go next, but I just wanted to anticipate what he's going to say here.
Until you gain more experience. When you use a mechanical trading strategy, trading becomes as simple as ABC. If there is a trade setup that fulfills your entry criteria, you take the trade without hesitation, reservation, or fear.
Exactly.
If there isn't a trading opportunity, you stay out of the market.
CJ!
As time passes, you will be able to identify the flaws of your strategy so that you can continuously tweak and improve it. And remember, you don't need to know what will happen next in order to make money. You just need to be in the markets when a trade setup aligned with your plan presents itself. In terms of the traders I worked with in actually doing this, let's look over a couple of real life examples. Let's begin with Alia, who was unclear on when to enter and exit the markets effectively. She was using the usual technical analysis methods which are not profitable, and she was struggling to make money trading forex. She'll make small profits and take large losses, sometimes due to emotion. She then started implementing our mechanical trading framework, and 2 months later, she's banking multiple winning trades with high risk to reward one after other, making over 25.6k with zero thought or stress or emotion. Next, Samudin, who made over $20,000 trading after working with us for just 3 months. Now, trading hasn't always been this easy for him. He was constantly losing money, block methods which are not profit flaws we see. Improves sometimes due to emotion strategy.
Okay, so deposit 50k, profit 8k, swap minus balance 57k. So he's showing that he deposited. Okay, this is his one profitable trade, right? So, but it's a 50k live funded account that he made this money on, right? So you guys have to think about that. He's doing crypto, right? Like he's doing crypto. Like you can see BTC USD, right? He's doing crypto. He's doing forex. You see a lot of his profits though are here on forex, right? He lost money up here with crypto. So be careful, guys. Crypto's funky, bro. Crypto's funky, and it's stressful. But yeah. See this pump here? It bounced here. It's not following. It's not breaking. It's not confirming the downward trend yet. So I think it may come back up here now, right? I'm not gonna. This is part of the mechanical trading though, right? I'm not going to initiate the downward trade until it breaks that EMA, until it crosses over, right? If it doesn't cross over and it breaks up here and it continues to pump up, then I know that I can set a buy probably around 95, a little over 95, and sell it at 98.5 because of the history we looked at before. So like that's this is something to consider, guys.
He gained extreme clarity and confidence in the markets and became a consistently profitable trader in his first year of trading, as you can see on the screen. Our mechanical system has allowed countless of students to not only get funded and bank consistent profits, but also scale their trading accounts to 7 figures and beyond. Now, you must understand that your sole goal as a retail trader is to follow the smart money footprints, because they are the ones that have the ability to move price. And that is why our strategy is built upon following institutional money and by being a reactionary trader to trade this activity. In layman terms, I basically want to know where smart money has entered into the market and where they are going to enter again, so that I can jump on board and ride the big money like this example over here. Now, if you want to learn more about the proven mechanical trade quality,
Let's go back to that real quick.
in layman terms,
so where banks and financial institutions entered, right? So now I don't know how to track those, right? So that's something that we would have to look up at some point, right? But how do you track the big money and see where they're getting in? How are you telling at which points they're getting in, right? So that's something to consider too. If we could figure that out, that would help us. Obviously, they figured it out. You can always do something like how to figure out how institutional money. I can't spell. Or let's see when. Gets into a trade for Forex. And here we go. ChatGPT is going to tell me. This is based on price behavior and liquidity, not indicators. Core truth first. You cannot see institutions directly. You infer their presence by liquidity grabs, volume spikes, market structure shifts. This is all more complicated stuff, and we'll get into that on future events. But price spikes above a key high, immediately reverses. Strong candle closes opposite direction. These are all like break in market structure. These are all things that you can do to train yourself to notice these shifts in the market. And this is the tough point, right? Like uh, trying to
I
figure that
basically
out.
want to know where smart money has entered into the market and where they are going to enter again, so that I can jump on board and ride the big money like this example over here. Now, if you want to learn more about the proven mechanical trading strategy that made me over 6 figures, watch till the end. The second key to becoming an outlier is to
All
have a
right, so this is key too. We're gonna stop here because we're at the end of a 2 hour mark. I appreciate you guys for being here with me as long as you have. I'm going to end the live stream here. Next week, we're going to be back, same time, same place, www.discord.gg/CJN Friends. We're going to be doing DGen's Den every week, every Tuesday at 11 a.m. Eastern, 4 p.m. UTC. There may be weeks when we don't do it, depending on whether or not we have a project week or something. So that's something that we will announce in the server. Otherwise, this is going to be our regular event every Tuesday. Um, Tomorrow, we're going to be doing it at 12 or 5 p.m. UTC. And it's going to be more of a community event. We're going to hang out. We're going to have some fun. We're not going to be doing anything serious. No creator stuff. No, no, no like G-Gen stuff. It's just gonna be us hanging out, maybe play a bot game, maybe some Rumble Royale or something. I know people have been waiting for Gardic so bad, but at the same time, um, Gardic's been rough for us, so I don't know if we're gonna do Gardic again. Because only like 20 people participate. The other way, we can get 300 people to participate. I'd rather give more opportunity for more people to participate. But yeah. Anyway, thanks for joining us. I will catch you guys later. I'm gonna end this stream now. Have a wonderful day. Trade smart. Don't degen. Even though this is degen's den, don't be too much of a degen. Make sure you're making smart trades. There's always the potential for making big money. But you just don't want to do it in a way that you're risking too much. So I want you guys to be profitable. I want us all to win. I appreciate you taking the time and hanging out with us today. I will catch you guys next